Wait a minute, guys. I will connect my audios. My earphones. Okay. I think everything is perfect. Recording is on. I think voice is clear as well. Okay, guys, this is just a small video to how to analyze the stock. This is not the core thing to analyze the stocks, but this is way the I do, and most of the books have written the same way. Like I didn't read the new age books. I'm reading the only old age books. Apart from Mark Manning, I'm not seeing anything fascinating in the stock books because he teaches something like different things and how to understand the market. Apart from those, I don't see any kind of new books giving worth to me. Old books are literally gem. They're providing something different. Okay, I'll go through the charts. Last week, I think we have not able to see any charts properly. Dollar index. No. Let me go to the index. Okay, let me go from all the indexes. Dollar index currently it's weak. Let me take it to this one. Okay. Dollar index is currently weak and we are seeing some drop in the dollars as well. Okay, there is no problem. We may see further weakness in the dollar index, no problem, and it's reacting to current demand zones. So next supply zone will be this. Again, it will go bounce back around these levels. You get a supply zone. Dollar index, I think no one is sending the money as a remittance to some other area, so you don't know to worry. Dow Jones index, it has broken the supply from this supply. This is the first supply, second, and third. Now it is in the strong last supply. After this, there is no. What has happened? After this, there is no strong supplies in this area. 100%. There will be no strong supplies after this. Now it is reacting these two supply and this will be taken out if you see any pullbacks. And yeah, let me put down 50. As of now, we can see if it may go range bound, any actions, and you may see any 50 moving average around these levels. Actually, it is coming to this level. If it drops down, we can take a trade. Until then, Dow Jones is showing bullishness. I think yeah, India is no problem. Now we are seeing what I expect in the market. Now I am expecting at least some bit of corrections in the market. Not we are going every day up. It's not a good sign in the market because every day up will lead to a huge fall in the market. When it's going up and up and up every day, it will also lead to some. This is only if you can, if you don't want to teach. So supply and demand theories because this whole way I'm not looking any supply and demand, just drawing the trend line and see this is the one major area. After this break, you can see some fall around these at least 50% levels, whereas 50%. around 50, around these levels, around 17,500. That's like it will be. I'm expecting that the areas to reach to get new 4 to 5% drop in the market. But yeah, why I'm saying this is, see, now there is no momentum in the market. Literally, after this candle, they are forming some range of consolidations. Either they should breach up or they should breach down. That's the mark to the market. We cannot decide. But I'm expecting some corrections in the market. Not of all. Say Nifty Bank is pretty strong, I think. They are strong enough. But see, look at the candle sizes. These are huge, huge candles, but now the candles forming are very, very thin. Somewhere the correction is going to happen, but yeah, we cannot say whether it is going to happen. So always trailing your stop loss. If you are long in the market, always keep a tight stop loss if it is going up. Nifty 50, I have said done. Nifty Fin is the same is going on. See, this is the area where if the market comes down. Nifty IT, it has broken the resistance. Now it is time for IT to fly. Currently, you can look to these setups where the market is. If it breaks this 30,467, that's the end of the. I think that will be the end of the bear run in the IT sectors. It will start moving up. Nifty Auto, see the setups which I have explained. It's taking place. If it breaks down these levels, you can exit from the market. Currently, this demand zone is holding. Metal is doing pretty huge, but it's currently going to the resistance. You can look for any drop and buy in the demand zones. FMCG is completely. I have warned you during that time itself. For these areas itself, I have warned you. I am not looking good for, and this market is not looking good for FMCGs because it's going when Nifty 50 and other markets are going up. This should be fallen down. It has inverse correlations as well, where compared to because we almost outperformed the market when the market is consolidation. Nifty, yeah, new price cap. This mu was huge compared to this mu. When it compares, this mu are huge when it's compared to mu, and see the drop has stopped here itself in FMCG. This is the last drop. After that, we have another whole new low. Here, there is no whole new. This is the area you should be looking for buying. Not now. Now it is not the time because we are making higher highs. Now it is not making higher highs. Now it is the time. The big players are exiting the market. Now you should look for any short opportunities in the market if you are in FMC sector. FMCG is not good for buy. I'm not looking for any buys. This is how you have to look at the market and how you have to trade. Don't trade blindly because I learned this type of techniques from Mark Manivarian as well because he trades like that and that's why I read about him. I give credits to him a lot because he literally opened my eyes. That's okay. Next thing, pharma. What we are seeing is just a small corrections in the market. See, this is the small corrections in the market. Don't expect farmers to break all the lows and come. I think pharma will do far better. If you are accumulating the pharma stocks, you can accumulate. If you are pharma Bs as well is there. If you are investing in the pharma Bs will be there. But momentum will be slow in pharma sectors. That I'm dare to say that momentum will be very, very slow. But if you are investing in the pharma, it's good. If you are trading, you can look for bank sectors or financial sectors. It will be very good because there will be huge momentum in the market. Reality as of now, it's reacting to this zone, this base. Media, not a good sign. Energy, not a good sign. Why I'm saying is, see, it's currently reacting to these levels. Whether it has to break out or it has to sustain. Again, there is one level. See, this is how levels are there. These levels will form like what I can say consolidation zones. So your stock will be stuck into so much zones. See, after consolidation breaks out, you will be see a huge move. If here consolidation comes, they can again there will be here consolidation. Then only you will see a huge move. This is what happens in the farm energy sector. See, you'll say cup and handle pattern that's all, but there is no momentum at all. If you have patience, you can buy for energy sector, but don't buy IEX for sure. I'll superimpose IEX with most of the few people ask IEX. I know IEX what is comparing with the energy. See, what's happening in the energy is completely different from IEX. See, energy is looking good. If you see in weekly also, it is trying to, in my daily also, it is trying to go up. Okay. Currently, it's not good, but it's trying to go up. What it's, you can see simply a trend line sir. Okay. Simply a trend line formation. Okay. Simply a trend line. That's the simple matter going on here. Simple trend line. Okay. And it's going up. You can look for these highs to take a note. Then you can look for some consolidation around these levels. You can look for buy. But the stock should exhibit the same replica as energy index. This stock is completely opposite to energy index. See, this is the low where I have to place. Okay, let me put it in weekly. Okay, this is the low max and this low, and we are making higher highs and higher lows. See, higher highs and higher lows in weekly. But where is the top here? For here, the top is here. For this, the top is here. See, clear divergence. Don't buy the stock, just see higher highs, lower lows. Now as well, lower lows. Lower, completely low going down. Why you need to buy the stock? Bullshit. Sorry for the language, but yeah, I get when people ask about IX, that's what I feel because you guys never compare with the index and choosing the best stocks. If you are investing, that's the different ball game. If you are trading, why you want to buy an index, IX like stock? It's a blown out stock. When you turn on the volume, that's no volume at all. Daily also you can see. Now let me, if you have any 50-day moving average, let me see whether I can get any volumes. See, average volume is 5.2 million. You can see in 50-day moving average, it's showing near volume indicator. It's showing average volume is 5.2 million, but today's volume is around 1.3 million. It's not at all worth buying anything else. Yes, there is no worth buying at all. Let me go for US dollar. I think yeah. This video should not be pretty large, but what I can say, at least you need to learn something from me, right? Reality I have talked. Media not good. Energy, infra, consumption. Consumption as well not good. Nifty commodities, yeah. It's waiting for the breakout. Now you can look for the demand zones around these any levels, and you can try for an entry. It's not a big deal, but you can fire around these levels because your stop loss will be minimum. Okay. Currently, the Nifty 500 is doing pretty good. Mid cap is not doing well. Private banks are doing good. Healthcare sectors, pharma and healthcare are mostly same, but there will be less momentum. But you can see if you are invest in this stock, if you want to invest, pharma will be very good. But for trading, I don't like to choose pharma because moment will be stuck. Oil and gas, no. Next 50, don't problem. Okay. My SIPs will be on Nifty mid cap 150. Okay. Small caps are not. Everything only Nifty 50 is going up. Only see this is sector rotations happens, guys. There are some quarters where only large caps moves up, not even a small caps will go up. There are some quarters that a large amount of money is pumped into mid and small caps. So, small and mid caps will pump like anything. So it's not the fact that large cap moves up, small caps moves up. You have to be in the where the market is moving. If the large cap is moving, you have to trade on those stocks. Don't pick the some other names to trade. Watch list. See, for all the people who are trading in the market, I kindly ask to use just 200-day moving average in daily time frame so that you can eliminate most of the noises. Okay. I'm seeing most of the people. I'll show the stocks of the last week. See, this is the Biocon. I said not to enter any stock because if it is below 200, no point in buying. It's a simple reliance. You can look for an entry. It's a simple filter tool. Just apply filter tool for trading stocks. Just if it is above 200 EMA, you can 200 SMA. So not EMA, 200 SMA in daily time frame. If it is above that, you can look for you can filter the stock for your entry condition. See, you can filter ICICI Bank, you can filter Dr. Reddy's, you can filter MBC India. Now, see, MBCC is currently going very good. Now, Engineers India, IDFC First Bank is good. See, Manufacturers is bad. Voltas is bad. Modern Laboratories is bad. TV8 Gas is not good. Not good. Manali Petro not good. KM Sugars Mill not good. Rana Sugars not good. Bajaj Hindustan not good. Gujarat State Fertilizer not good. Tata Motors is currently at the 200 moving average. You can look for any breakouts at these levels to filter your stock. Axis Bank is okay. It's a simple tool. You can Infosys is good now and look for any trade opportunities. Sabari is okay. Adani Ports. Okay. Biocon says the same is coming. See, it's a simple 200-day moving average can filter out majority of the things. I'm giving the Google form, you are filling out the stocks. That means it's stock. Now, I'm not going to say good thing about the stocks. I'll say the bad thing if it is above. But below the 200 SMA, my mind is prepared to avoid the stock. Because I have read many of the fund managers, like I have gone through one video of a fund manager who just, if he just applied 200 SMA in his career, he would be a shining star. He himself said he lost 90% of invested amount in one single stock. Not the whole portfolio. That single stock wiped out almost his gains. Okay, that's the power of 200 SMA. If you underestimate it, you can, but yeah, but I don't underestimate it because it's a filter condition. I don't look for entry around 200 SMA, or if it is above, I will take my conditions to take an entry, how the candle is forming, whether it is forming any VCP patterns or like that, then I will take an entry. Currently, it's not a buying recommendation or good or selling recommendation from 200 SMA. Just filter it whether it is above or below. If it is above, you can look for an entry. If it is below, don't look for an entry. if I'm holding the, I never give a buy signal for a stock below 200 SMA. So if I am giving a form next time, kindly go through it and fill it. If it is below 200 SMA, I'll simply say avoid it and go, because I don't want some other good stock to get analyzed properly, because it takes most of the time. Okay, kindly understand those process, because if it takes most of the time in the bad stock, I cannot explain the good stock in the most proper way, because I have to take, if you want to learn more from me, you have to give the room for me, because I cannot take a video for 1.5 hours. No, can I see this itself, 30 minutes for no one, most of people won't watch at all. That's the problem. So kindly fill the form so that you get better stocks and better analysis from me. Okay, guys, I'll put the forms as well, new forms as well, uh, for the coming week. And I need your and kindly fill those forms and kindly ask questions which, so that I can make some genuine content about it. Okay, so that I can help you in the trading career. Most of you has pinged me for mentorship. For shoot, I am not able to take mentorship because I'm completely on the research part, and on trading. So I'm not going to take any mentorship, because my trading strategy are coming from Mark Manivaran. So I don't want to take. If you read his course, you will trade far better than me. So you can directly enroll this course. It's around 3 lakhs. If you have 50 lakhs capital, you can directly enroll this course. If you are having less than that, just buy his book and read. It's the best way to. So if you read his books, it will give you 100% knowledge. For sure, I'm saying. You will know how to filter the stocks and how to buy the winners in the market. And I see few people's always trading in the futures and options market. Futures and options are not for retail people. Let me say frankly, it will not help you to grow your small account very big. When you are having in the cash market, you have high probability of choosing your risk management and choosing your trading positions. When it comes to futures, there is a particular lot you have to pay for it. And my masters are planned, like my masters always, I think, Marvin, Unicorn, Oliver Kell are planned to catch the big moves in the market. They don't never dare intradays. They use leverages as well. I'm not saying leverages because their type of trading is completely different, because Mark Millman is around 40 years of trading experience, because he knows to use the leverage properly than me, not me, than anyone else, I can say. But in his early stages, he never uses leverages, and he was doing better at his job, because he's earning around 200 percentage on average per year. So it's best to follow him. Just to copy their trading styles. That's all. You don't need to be an extraordinary person to be in the market. You just try to copy their styles and make some good amount of money in the market. Okay, guys, I'll drop the forms for this week. Okay, I'll try to take the sessions as well. Okay, and try Saturdays and Sundays. If I get the time, I'll be there. Yeah, try to take one session on Saturday evening. I'll put the poll on that. Let's see how many people join. Okay, guys. Until then, it's bye from me. Let's trade in the market and be safe in the markets as well. Kindly do investments. Kindly do in SIPs. Just buy index funds, and for a longer term, your wealth will grow a lot. Okay, guys. It's bye from me.